Welcome back. You're still with us here on Editors Roundtable, and this is a special Diwali edition. We have Madhu Kela and Sunil Singhania who've been talking to us about the near term. Thanks for being with us once again. Madhu, if I can sort of complete that earnings question, what's your own sense?
No, it's a big thing. I completely agree with Sunil because ultimately markets, as they say, are slave of earning in the long run. In the short term, you can keep discussing various things. Ultimately earning. But my own intuitive sense is, like the data which we got, there is no intention of government to have fiscal deficit collapse to 2% by the year end, you know. So they will be quite aggressive in expanding. And one day understandable because of election, it always slows down. So I am quite hopeful that there is nothing which we are seeing that structurally has gone really wrong, which should make us really think that earnings will not come.
On the consumption side also, you're not very worried? On the consumption side, you're not...
Consumption also, government से पैसा नहीं आता, Prashant, तो उसका impact होता ही है ना. Once the government releases money, like what I'm talking to some people in Maharashtra, this entire Ladki Behna and people getting real money in the bank, which will have impact on the consumption.
Okay, Surabhi, you want to talk about some numbers, big numbers that we've seen in terms of retail investors coming into the market?
No, absolutely. And I think personally for me, because I've been tracking, personal finance for the last 6-7 years, this is just such a great celebration. And like Nimesh pointed out, you gentlemen were like there to sow the seeds back in 2003, 4, 5, right? To tell people that...
We had huge conviction, trust me.
Absolutely.
That time,
absolutely. I remember I started some of my first SIPs, some of my first funds, must have been funds that you folks were managing. So just a minute to actually talk about the numbers, to recap what a great journey it's been for the market from a retail perspective. Because if we hadn't had these kind of retail flows, then this 24-25% rise on the Nifty perhaps would not have been the reality. And the flows have come in not just in mutual funds, but even in direct equity. I mean, that's also been a hallmark of this year. So let's talk about it by looking at first the Demat account additions. That number has been a very steady number. So we're talking about 175 million Demat accounts in India now. This is the latest data that's available as of September. The run rate every month is about 4 million. It was even higher in September. And if you look at it, I mean, from April, we were at about 150 odd. It's been such a steady rise, right? Markets could, come and go, and you could have some range-bound phases as well. But that number has remained intact. Now, just to put some more numbers in context on the direct equity side, if you talk about the number of active clients on the NSE, latest numbers almost touching 48 million. So that's one part of it. And discount broking obviously has had a huge role to play in all of this. So the likes of Grow, Zerodha, Angel One, I mean, they've had a phenomenal year this time around because of the kind of market share hold that they have. The top 5 discount brokers are contributing to almost 65% of the NSE client base. And Grow is actually, by the way, the leader with about 25%. Now let's come to the mutual fund story. It's sort of sipping away to that pot of gold, to the, that wealth that we're talking about. That's been the story so far. So as of the latest available figures, the industry's total AUM has crossed 67 lakh crore rupees. And the inflows at an average, I mean, I looked at this data starting from the fiscal onwards, the average inflow is somewhere between 35,000 to 40,000 crores every single month in equity funds. Let's actually bring up the tabs because, in May, we were at 34,000. So we crossed the 20,000 crore mark in April. May, suddenly there was this big surge just after, the election results came through. June, it just kept, going higher after the 4th of June. Dip was bought in a very, very big way. July, August, September, there's been a small blip. And I think October is going to be the true test. And we'll talk about that as we go forward as well. The SIP inflow, the SIP story is massive. It's phenomenal. Look at the number. The last number, we've crossed 24,000 crores being collected, being drawn in by systematic investment plans. That's been the power of retail. And it is this flow which has ensured that this $1 billion of selling that we're talking about, FPI selling in October, that has been neutralized. Imagine if these flows were not there, where the market would have been. And, this brings me to the question, gentlemen, that I want to sort of ask both of you. Sunil, if I could start with you. A lot of this money is actually money that has not seen market cycles, right? It's come in after COVID. The question is, do you think they'll keep the faith? If we get into a listless, range-bound kind of a market, will they stay the course?
I think since, I would say 2003-4, which you mentioned, 20 years back and now, the maturity, I would say the awareness, not knowledge, the awareness among generally, Indian investors has gone up quite significantly. And again, thanks to you guys also who keep on harping the fact that this is a long-term mode of creating wealth. It's not a short-term machine. So I would say that the traders maybe are looking more at the short-term, but the SIP guys have an object in mind. It's for a particular purpose, that I need this money after 10 years, I need this money after 5 years, I need this money after 15 years. And therefore, I don't think a big impact would be there in the near term. But yes, if for 2-3 years you don't make money, then there might be an impact. But we are not looking at that kind of a scenario, So I don't think 2-3 months is going to make too much of a difference. Maybe, a few, maybe 500,000 crores here and there. But otherwise, investors are very matured. Even we run a AMC, not the retail AMC, but we also see that on a fall now, there are more questions asked whether we should invest more rather than, take it out. So I think at least for the next few quarters, years, we don't see that. But as I said, if you have a scenario where for 2-3 years you don't make return, but which is not the base case we are working with, I think the maturity level is pretty decent. The only one I would say caution is that don't get carried away by the near-term themes and try to do exotic stuff. There are momentum funds and there are so many other kinds of funds. Just maintain your plain vanilla diversified fund route. Try and create decent returns over a long period of time rather than trying to maximize your return by going into funds which have done the best in the last 3-4 months. I think that is the only advice I would like to give. Otherwise, it's all fine.
The MF industry has also had its back against the wall, right? I mean, they can't innovate, can't offer more than one fund per category. So therefore, you have thematics and you have quant funds and all kinds of new strategies that are
But we already have 20-30 funds for every fund house. And they can keep on growing those funds itself. Right?
This retail flow has also created this industry, right? I mean, which is AMCs and brokers and wealth managers. I mean, that segment has done phenomenally well.
And I think it's just a start. Because I think this is a great business. It's linked to the economy, and obviously it's linked to the market. So the markets do well. Obviously there is I would say AUM pump up because of mark to market, and then there is returns also. But if you see the numbers, if you see the numbers, we have like 5 crore investors. We still have a long way to go, and this 5 crore investors are maybe investing 5,000-10,000 rupees a month. That will also grow. Correct. So you'll have more investors, plus per investor also going up, plus you will have an appreciation because of AUM.
So, Sunil, Nigel has put out a nice piece on the financialization and how many of the sector stocks have done so well. Nigel, why don't you just put that?
Well, Surabhi put it beautifully with regard to the financialization theme, right? And I feel personally very happy and responsible as well to be developing this equity cult here in India, because it's got a big runway, as you all mentioned as well. So how do you play? There are a few themes. Either you look at it via the stock markets. BSE has done very, very well. IEX has its own set of problems because of the coupling issue. You have MCX as well as NSE in the unlisted market. So some of these stocks have done very, very well. I just want to pull up a valuation plate on the screen. BSE currently trades at around 48 times odd. IEX now trades at around 30 times, so there are some uncertainties out there. And NSE in the unlisted market is trading at roughly around 30 times or thereabouts. Well, IEX, the problem is with that coupling, and that's why that stock has been a big underperformer. But otherwise, you pull up the screen, all those stocks have done quite well in the last 1 year or so. AMCs, they have been the other outperformers. In the last 1 year or so, some of these stocks have given you 50 to around 80% returns or thereabouts. And the commentary that's been coming in from some of these AMCs has been very good. SIP flows are going up, so it's one way to play it. The other one is, HDFC AMC, valuation-wise, it's not very, very cheap, but the results were strong. There was AUM growth over them, and the yields as well increased. So the street, did take note of that. And the stock ran away. Nippon, the revenue number was a bit of a miss, but operationally it was quite strong. And that's why that stock as well has done well. I think there was a large seller which has got cleaned out. So that's why that as well in the last couple of weeks, that's come back into play in the AMCs. And UTI, it was, the estimates, it was more or less in line, but I think they lost some market share. That stock has done quite well. All these names, they trade anything between 19 to around 30 times on a forward earnings. UTI being the cheapest at around 19 times odd. Brokerages and wealth companies, you have a lot of them that done well. Actually, Angel One has been a rank underperformer. If you compare it to Motilal and the other stocks in there, Anand Rathi, you have 361, WAM, Nuvama as well. Keep in mind, all these stocks, they're trading at roughly around, 20 to around 45 times or thereabouts. But all of them actually have doubled, barring Angel One. It did well in the previous year, but in the last year, it's been a bit of an underperformer out there. And finally, the enablers. The K-Fintech, you have CAM, CDSL, and Prudent Corp. Prudent Corp, even today, after its numbers, it was up more than 15%. And the good part about these enablers is that the numbers have been very, very good. All of them, CAMS came out with a good set of numbers, K-Fintech as well. So there's a big basket of these financialization themes to play. I wanted your opinion. Madhu, you go first to tell us how do you play these themes? Because if the equity cult is going to develop, then some of these companies are going to do very, very well. Near term, you'll have this, F&O restrictions and, the watchdog having their word with regard to trying to curtail any kind of speculative trading. But otherwise, some of these companies have a big runaway.
So I would say that, the data which Surabhi put and the data which you gave is the reason for my real bullishness in the market. That, this is why I am not scared.
Yeah.
That, I'm not in that camp that this is some fly-by-night thing. It came because of COVID and it will go away. I strongly believe that first time the Indian investors are recognizing equity as an asset class.
Correct.
Yeah.
People are getting used to investing systematically. And this is not that this is the first time in the world this is happening. This is what has happened in America, a lot of developed nations, where equity forms significant portion of people's saving. Like what happened in the US under the tax scheme of So I would say that, I don't doubt, and none of us should doubt, that ho sakta hai, 1-2 crore demat accounts may get reduced. You have had 17.5 crores in one few months. It may not add up, or few months it may even decline. But this looks like a real structural story. And it is like, abhi to, this is, a lot of these people have come seeing the people who have made money. So I call it in my own language, like you made money और आपके पड़ोसी को दिखा आपका पैसा बन गया तो now the पड़ोसी is coming और उसका पड़ोसी is coming, right? But it is not that the game is over. We are still talking of out of these 17.5 crore demat holder, then only 5 or 6 crore individual real investors in a country of 145 crore population. So if you look at the, there is still long way to go. And the fact that you have such robust, reception to a lot of these QIPs. In good old days, if you hear that 2000 crore ka koi stock mein selling aayega, we would become nervous. Today we celebrate that selling aayega to absorb hoga and maal milega. Right? So I think market is gone. Just to finish this point, market has gone through a real structural shift in the last 3-4 years.
Indeed.
And I think it will continue for some time. The second point, which I would say that, this asset class, equity being created as an asset class, if you look at what portion of saving is still coming in equities, of the overall portion, it may still be 5-6%. Yes. It's not some abnormal number for us to be really alarmed about. And which is why I say, while we gather here from Diwali to Diwali and we talk Diwali to Diwali, my friend, this is not about this Diwali and next Diwali. Yes. This is about tens of Diwalis which are in front of us. True. We are talking, if you can generate income if you put time frame. Yes. You can't generate wealth if you put time frame.
Absolutely. And narratives also change with the market, right? The same conversation 2 months back, you remember all the chatter about whether there's money, household shiftings moving from banks to the stock market, and a lot of chatter. And now we're saying, thank you, retail investors, for the resilience, because the rupee has been stable, FPIs can sell. I mean, there's so much money coming in here. By the way, just an anecdote. So I caught up with the CEO of a large asset manager, and the chatter was about, ground events. The sales teams have do a lot of activation. So he said, Surabhi, guess which is the city from where we get the maximum number of queries, and a non-metro city. And I thought maybe it's Pune or one of these places.
No.
He said it's Patna. Yeah. The kind of sort of interest that those events in Patna generate is really the story of the Indian retail investors. So,
Absolutely. Sunil, I want to ask you about what Nigel spoke about. The companies which represents the financialization. From a long-term perspective, should investors look at valuations and be worried? Or if it's a decadal theme, then one should just look to add into their portfolios these kind of names, the brokerages, the asset management companies and all.
What you have to understand is they are all part of the financial ecosystem, but very different. Yeah. So exchanges, they have the advantage of entry barriers.
Yes.
So if there is BSE and NSE, there is not going to be a third exchange.
True.
So they will always have that advantage, and I think to that extent, they should always trade at a significant premium to others. Then you come to the asset management companies. They will have entry barriers, which will be significantly more than others, less than the exchanges, but they have entry barriers because you have brand, you have distribution and all. So I think they will continue to grow. The advantage which AMCs or wealth management companies have over exchanges is that you make money even on the appreciation.
Yes.
So for exchanges, it is a transactional revenue. And for wealth and asset management companies, it's an annuity revenue.
Yes.
Then you come to the broking side. Again, it's more transactional. So I would say the broking companies should get the least valuation. Okay. Maybe the asset and wealth management
That is
companies.
where valuation will be important. But for others, I guess opportunity
100%,
will be more important.
because you know, once you have asset, your base level profit is assured. So which is where the asset and wealth management companies will come into play. So imagine if you talk about, say, the market's giving 12-15% CAGR for the next 5 years.
Yes.
Without selling a single new fund, you will have your assets double in 5 years. You know, so your profits will automatically double in 5 years.
You own the customer in that sense.
You own the customers and you make money on the appreciation also. So I think it's a great business. We are lucky we are in that business. But I think this theme, we also are a little bit value conscious. But I think this theme, we picked up 5-7 years back. We should have bought it irrespective of the valuations. We are even still waiting for valuations to correct, but I don't think they will.
What's the comfort zone? Like, so that we have a reference.
Question here. You should have asked, when are you listing Abakkus?
I was going to ask. I was waiting for the break.
So why don't you tell us, Sunil?
No, I think, see, the business is great. And, at some point of time, we'll look at it. But I think the size of opportunity is so huge. In the US, you have, so many AMCs. I think in India, you have handful,
40, 45, yeah.
And out of which maybe 10 have assets of 1 lakh crore or more. 1 lakh is what, $11 billion. 11 billion is now chiller for India. We are, not the old India where a 200 crore IPO or a 500 crore IPO is to get the front page. Now the media will not even cover a 200 crore IPO.
I just We're used to 11,600 Swiggy, 23,000 crores Hyundai.
And we speak so, like 20,000, okay.
So BSE and NSE, right? You started with exchanges. You think we are in the process of seeing a significant accretion to BSE's share as well? What is your view?
See, I think there are two exchanges, obviously. NSE was miles ahead, but BSE has done a lot of catching up. It's very tough to hazard a guess. But obviously, in a two-player market, if the second player starts to do slightly better than the number one player, because the market share is so low, you can always gain market share. And I think that is what was happening. Actually, if you actually see, Sensex was what we used to track. Abhi bhi hai na, log bolenge 80,000 hai.
Correct.
No one talks 25,000. Frankly, Nifty, even now, not too many people will remember the exact level of Nifty, but Sensex everyone relates. But somewhere they lost the plot. Maybe they're getting it back. If they continue to do the good work, maybe, they might inch up their market share further.
Okay, all right. So exchanges, wealth management firms, asset management firms, brokers,
IPO.
Probably an IPO. So this is one hot theme that's going to continue well into the next year. Okay, we do have to take a very quick break, but we'll come right back. And on the other side, we'll talk about some of the biggest wealth creators of the year and also pockets where wealth was destroyed and whether there's any revival possible or not and how you should be looking at both the creators and the destroyers. Back with that in just a bit.